You know, in a market that's completely obsessed with the next big thing, where these AI-fueled tech stocks seemed like the only game in town, something really weird just happened. An old-school, slow and steady giant didn't just survive the chaos, it totally thrived. Okay, let's dive into this anomaly and see why Warren Buffett's playbook is suddenly looking like pure genius.
So first, let's just set the scene here. The huge party for tech stocks, it came to a screeching halt. The whole story that had been driving the markets for months, the one where spending on artificial intelligence would just create endless growth, well, it suddenly hit a wall. Investors got nervous. They started wondering, hey, is all this spending actually turning into profit? And that's what sparked the big sell-off.
And this chart, wow, it tells the story perfectly. That dark blue line, that's the S&P 500, which is basically the whole market. As you can see, it was a pretty bumpy week that ended up, well, almost exactly where it started, flat. But those other two lines, the ones for Berkshire Hathaway, they're telling a completely different story.
And that brings us right to our main event, the Berkshire Hathaway exception. While pretty much everyone else was running for cover from the tech storm, Warren Buffett's company was having one of its best weeks of the entire year.
And listen, the scale of this difference is just staggering. This wasn't just a little win. While the S&P 500 was down a tiny fraction of a percent, Berkshire Hathaway's stock shot up 5.7%. In a market that was desperately looking for safety, investors clearly saw Berkshire as a safe haven.
But here's the context that makes this whole thing so dramatic. If you look at the chart on the right, you can see that for most of this year, Berkshire was actually lagging behind the market. I mean, just a week ago, it was underperforming by almost 8 percentage points. This one incredible week single-handedly closed that entire gap. So how'd they do it? Well, to understand their strategy, we've got to look at a very specific and honestly a very puzzling move they made.
To really get Berkshire's strategy, we need to zoom in on one specific and at first glance, totally confusing story. It's about one of their major holdings, a dialysis company called DaVita, and a move they made that seems to defy all logic.
So this past week was just huge for DaVita. The company put out a fantastic earnings report, and as you can see from this chart, the stock went on an absolute tear, soaring nearly 29%. As one of the biggest shareholders, this should have been incredible news for Berkshire.
Logically, you just assume Berkshire Hathaway cashed in big time on this massive, unexpected surge, right? I mean, that's the dream, isn't it? To see one of your biggest investments just explode in value overnight? But what if I told you that's not at all what happened?
Get this. Just days before DaVita's stock skyrocketed, Berkshire sold almost $200 million worth of its shares. They sold on a Thursday, right before the amazing news hit on Monday. They missed out on millions in potential profit. And the big question is, why on earth would they do that?
Okay, so this wasn't some huge mistake. It wasn't a bad market call. The decision to sell had absolutely nothing to do with predicting DaVita's earnings or trying to time the market. It had everything to do with discipline and with a commitment they made years ago.
So here's the deal. Years ago, Berkshire made a promise to DaVita that they wouldn't let their ownership stake creep above 45%. Now, because DaVita has been buying back its own stock, Berkshire's ownership percentage was slowly going up without them even doing anything. So to honor their word, they were actually obligated to sell shares to stay below that limit, no matter what they thought the stock was about to do. It was a clear-cut case of principle over potential profit.
And that one little story, it's the perfect snapshot of the entire Berkshire Hathaway philosophy. It's a way of thinking that Warren Buffett has been talking about for decades. And believe me, it's a powerful lesson for today's chaotic market. Back in 2016, Buffett gave this piece of advice. It's not about chasing whatever's hot or worrying about what everyone else is doing. It's about having a framework, a set of principles that you stick to, no matter what the world is throwing at you.
So here's that framework. First, you have to think of a stock as buying a piece of a real, actual business, not just a blinking light on a screen. Second, you got to ignore the day-to-day noise. Buffett says you should be comfortable buying something and not even looking at the price for 5 years. And third, and this might be the most important one, avoid envy. Don't jump into a risky, stupid game just because it looks like other people are making fast money.
So what does this philosophy actually look like in the real world? What are the actual businesses that Buffett and Berkshire believe make sense to own for the long, long haul?
This slide shows us exactly that. Just look at these names: Apple,
American Express, Coca-Cola, Bank of America. These aren't speculative bets on some unproven new technology. These are giant, established companies that have been a part of our lives for decades. They are the very definition of buying a business.
And Berkshire doesn't just dabble. They make massive, concentrated bets because they are so convinced they're right. This isn't about spreading your money thin across hundreds of stocks, it's the total opposite. I mean, as this chart shows, over a third of their entire portfolio is just in two companies, Apple and American Express. They find businesses they really truly understand and they go all in.
And finally, there's this number, over $350 billion. That is how much cash Berkshire is just sitting on. Now, to some people, that might look like a missed opportunity, but in a volatile market like this one, that's a superpower. It represents patience, it represents safety, and most importantly, it's the firepower they need to jump on huge opportunities when everyone else is panicking.
Which brings us right back to our central question. As we just saw, a week of total chaos in the tech world became a week of triumph for a company that's built on old-school principles like discipline, patience, and just plain common sense. It really makes you wonder, doesn't it? In a world that is always chasing the future, maybe the real secret to success is found in wisdom that's timeless.